Continuing with the super coupling spreadsheet, but instead of these 1,000 companies, or just under, by 2032, we're going to try and look at creating 1 million much more solid opportunities and potentially another 3 million further opportunities. Let's move to this spreadsheet. Sorry, let's orientate it. An accounting theory of everything, a theory of greater equality. The bond, we're selling S-World bonds. We're not now, not until S-World UCS has proved the theory. But when it has, bond costs 10.7. Half of that in this scenario is going to Malawi, half of it's going to Zimbabwe. 50% is going to infrastructure that the bondholder does not own. That is owned by S-World, but it's for the benefit of all of Malawi or Zimbabwe if it was in Zimbabwe. And that's a part of the equality. Further equality is this 6 million we see here is being put back into the country of origin to create more businesses, more industry, etc. So that's more equality. Well, it's more of a boost, and we see the equality systems with it. And we'll see a little bit further down that half of the profit again goes to the personnel, who are for the best part Malawian or Zimbabwean, depending on which one they are. So that leaves about 2.6 million for land and industry. We've just made a rough estimate there. And let's get straight to the chase when it comes to the bond. The bond costs 10.7. Profit at year 2, 2 million. POP profit year 2, nearly 4 million. Total profit 5.9. Using standard valuation on shareholder profit, shareholder discretionary cash flow of 2.5. This multiplier would go up to 3 and 3.5 and 4 and 5%, up to about 5% in later years, the more track history it has. So based on the profit times the multiplier, just under 15 million, plus the land and the infrastructure that the business is worth, comes up to 17.7 million. Add the same for Zimbabwe if we started in Malawi, and that bond of 10 million within a year's worth a value of 35 million. Now we're going to have a look at the company, the window factory. Here we see the cost of making a window. Here we see tenders, and that's all we're worrying about. We're only worrying about tender trade. Makes a profit, 43% profit. Now, as we go down, we can see in the first year, tender from residential windows, 4.3 million, which cost 10 million to create. S-World Malawi needed 10 million for this company to make 4 million, which may sound like it doesn't make much sense, but we'll get there soon. Okay, more non-tenders here, small amount, token amounts, and more tenders, infrastructure, commercial, for a total tenders of 15 million, but this has been calculated at 21 million to cover these other orders, because we want a system that, at least in terms of accounting, is completely unreliant on anyone buying anything other than the process of the tender. Here we see 512, that's the amount of companies, tender companies we want per Malawi, per Zimbabwe come 2024, and you can see that costs 11 million. Actually, that's 11 billion. Now, here's the thing. We've only got 4 million investment, and we've already got here 11 million that needs to be spent. So we need a way of multiplying the cash flow, and we can see how multiplying the investment to make cash flow, and that's the res equation that we'll get to very, very shortly. I'm just going to go down. Here we can see the POP profit. POP point is set at 4 million. Therefore, everything past 4 million is POP investment, leaving profit of 4 million. 50% of that goes to the personnel, 50% of that goes to the bond holders, which creates new assets as part of the initial bond. And when we come to the staff, their money is split 50% on housing, 25% spent on family welfare and education for the farmers that no longer have work because of the combine harvesters. Okay, and that's this page done for now. We're going to quickly move to the magic now. Here we go, res. Now, res, what is it? First of all, res could only apply in this day and age to a system that was mostly philanthropic or ecological or just in the interest of the men and women of a country. Because 75 to 80% of everything that S-World is going to be doing, be it building houses for the people who live there, the Malawians, be it electricity, be it, you know, this, that, and the other, what we're saying is, because of this, we should only be taxed on the profit side of the venture, which is about 20%. Therefore, tax should be, instead of on average about 25%, it should be on average about 5%. And this is that 95% we see here. In addition, this also makes an awful lot more money in this scenario for the government. Let's see, tax would typically be about 1.6 billion. They're going to get an extra 3.5 billion from this tax. So it's, you know, it makes an awful lot of sense for everyone to work really hard and get us this 95%. Now, this is where it gets tricky, but it's, if we take SpaceX and Virgin Orbit, both of them have worked to this standard. Basically 90% of whatever you make in-house, albeit it's within the network as opposed to an individual company, but you know, that's just an accounting identity. So for instance, parts, most expensive, 13 million, 90% of that is going to go to other S-World suppliers who get taxed at that. Then 90% of that supplier is going to go to other suppliers, and this carries on through spin 1, spin 2, spin 3, 4, 5, 6, 7, and 8. And we can see the initial input has increased by 517%. So if investment is 4 billion, we have cash flow of just under 21 billion. And you can see 10 of that, or 11 of that, would go to the tenders. We're going to add in a little bit of sales quota. But the bottom line is, there's plenty of money left over for doing all sorts of things. And we've already seen the tax. Now we're going to look at the same scenario, but in this case, it's gone up to 23 million because when we pay the government their tax, it's in network credit. So they must buy something from the network with it. Say, for instance, a new embassy. And then we're going to go to another scenario, exactly the same thing, but in this case we've changed the spin from 8 to 12, and you can see that brings us up to 29 billion, created from only 4 billion. And the thing is, this is GDP, because this is what's being spent. Malawi currently, and this is what we call the GDP game, this is why the entire book 3 is called the GDP game, because in 2024, when this 29 million is created, and this is an accounting thing, this is, you know, there's no, if we can get the investment, this is what will be done. That means currently Malawi's GDP is 5.5. It's going to go up to 29 plus current GDP. And that's going to be the biggest rise for any country in history by a factor of over 10, smashing Japan's record from 1950 to 1980. And because Malawi and Zimbabwe, or Malawi in particular, because it started with a particularly low GDP, everyone in the world is going to want to invest in S-World bonds, and that becomes an important factor in how many companies. To end off this video, 512 companies is the amount we wanted, but that gets subdivided into smaller companies of about 4 for making about 9,000 of those small companies, each of which can afford that money for that super coupling would have demanded. we're going to half as much again for non-tender companies, double in 4 years for 2028, double in 4 years for 2032, add 20% for municipal workers, and that's 68,000. And because of the GDP game, that's up 31 times to 2 million. Deduct for late start for some of the grand networks, brings us back down to 1 million. But that's 1 million that is guaranteed as long as we get that initial investment. Theoretically, we should double this for Greece, California, countries that are not abject poverty, and we should double it again for virtual networks for 4 million companies, which we can see creates the following: 16 million personnel, 67 family members in the welfare, 67 million people in full-time education, 50 million houses. Okay, so if we just go back to supercoupling, in place of this one company, we now have 4 million. Okay, thank you.